when does it make sense to build ground up versus buying an existing building, to develop ground up versus buying existing? When does that make sense? So it's all about the numbers. It's all about replacement cost. Generally, if it is less expensive to build than it is to buy, or there's lack of inventory, then it makes sense to build. You want to make sure you've got a 20 to 30% margin so that it makes sense and that the deal will cash flow when it's done. When it's cheaper to buy than build and there's plenty of inventory, then it makes sense to buy existing. But again, you have to make sure that the numbers make sense, that the free cash flow will cover debt service and provide for profit as well. So those are the things you want to have and you want to take into consideration when you're building. You want to build in about that 20 to 30% margin when you're developing, so that the property has equity, it has value when it's done. But at the end of the day, even if there is no equity and the property is worth what you have in it when you build it, if it's throwing off cash flow and it satisfies your return requirements, then it can make sense for you to build. It has to be a situation where you have the capital, you have the resources, and you are patient with your investments, and you have the time to get it built, get it leased up. You need to make sure that there is demand for the product that you're looking to build, and that the income will support the debt service and equity return on that project. If you're raising the capital from outside investors, or if you're using your own capital, you want a cash on cash return on that capital over time that satisfies your requirements. So if inventory is limited and if prices make sense and you can build in a 20 to 30% margin on new development, that can make a lot of sense versus buying existing, especially in a market where cap rates are compressed, competition is high, and inventory levels are low. This applies to any type of product, whether it's residential, commercial, multifamily, it can be anything. These same fundamentals apply. It's all about the numbers. Let the numbers make your decision for you. Let the numbers be your guide in every situation. The bottom line is you want to make sure you have free cash flow to service the debt and return on the equity investment, the down payment, that meets your investor requirements or your requirements if you are injecting the capital yourself.